This is Barry Zalma with part 3 of Arson for Profit and Terrorism, a story of how a good investigator, an excellent investigator, and an insurance coverage lawyer were able to defeat an attempt to defraud insurers out of multiple millions of dollars. After the motion for summary judgment was granted, the insured appealed to the California Court of Appeal. And with much briefing, the following misrepresentations were adopted by the Court of Appeal as being misrepresentations made without conflict and without dispute. The misrepresentations included that in February of 1980, within 3 years of their application to the insurer, defendants suffered a landslide damage to their property, which resulted in a legal action for $500,000 in damages filed against them by a downhill neighbor. In addition, the court found that in early 1981, the defendants suffered an uninsured loss by theft of precious stones exceeding $100,000 in value. This because the application did not ask about claims, it asked about losses. And a loss to the insured, even if not insured and even if no claim was ever made, still must be reported on an application for insurance so that the insurer can appropriately assess the risk it is being asked to take. In addition, the court found that on December 12, 1981, Underwriters Insurance Company had canceled a homeowner's policy which it had previously issued on the same property involved in the fire. In addition, it found that in March of 1982, the defendants, the insured, had presented a water damage claim to Blue Ridge Insurance Company with respect to the same property. Interestingly enough, that water damage claim was accepted, honored, paid, and the check was delivered to the insured on the exact day he signed the application for insurance. And the application used by Imperial and the underwriters in London asked only 2 questions. Have you ever had a loss in the last 3 years? And have you ever been canceled, non-renewed, or refused insurance? To both questions, the insured answered in the negative, even though he knew, or should have known at the time, since he received a check on that day, that the facts represented were false. In addition, the Court of Appeal noted that on April 5, 1982, over 2 months before the submission of the application to Imperial, the defendants had been notified by Blue Ridge Insurance Company of the non-renewal of the homeowner's insurance policy, which Blue Ridge had theretofore issued. Simply, they told him, you need to get a new insurance policy, and that may be why they applied for insurance to Imperial, which provided the same type of homeowner's insurance that Blue Ridge had provided, but they obtained it by lying about the reasons for the non-renewal and even lying about the existence of the non-renewal. When the adjuster was deposed in the litigation, he advised the lawyers for Imperial and the underwriters that as soon as he saw the water damage and the total lack of upkeep to the dwelling, the total filthy way in which the insureds lived, he immediately notified the underwriting department at Blue Ridge and advised them to either cancel if they could, and if not, to non-renew the insurance. They couldn't cancel because in California, once a policy has been in effect for more than 60 days, an insurance company can only cancel for non-payment of premium or fraud. And poor housekeeping is not a ground available for cancellation. In addition, the court found that a few days after the issuance of Imperial's policy, the defendants were informed that the reason for the non-renewal was substandard property maintenance by the defendants of the same property. In essence, exactly what the adjuster told in his deposition as to why, after inspecting the damage, he advised the underwriters of Blue Ridge to non-renew. In addition, it turned out that at the time of the application, there was pending a lawsuit with Equitable Life Assurance Society, where the company sought to rescind a health policy on the grounds that the defendants had made material misrepresentations and omissions in the application for that health insurance policy. Basically, the grounds for the suit attempting rescission was that the insured's spouse, at the time she applied for the insurance, had already been diagnosed with breast cancer, but had failed to disclose that fact to the insurer. So the court, after reviewing all of the evidence and all of the argument by the parties, concluded, quote, "We cannot review the application submitted by the defendants in this case without concluding that the information sought by Imperial and denied to it by the false negative answers and omissions of the defendants were material to Imperial's decision to provide insurance coverage." And they base this materiality and their decision on the fact that the underwriter who made the decision to accept the insureds as a risk stated that had she known the true facts, she would never have even considered the policy and would have refused to insure. In fact, what she said was, if I had known about the previous claim, I would have added a 10% addition to the premium. If I had known about 2 claims, I would have added a higher deductible to the policy. Had I known of the 3 claims, the non-renewal, the cancellation, and the rescission, I would never have even gotten close to even considering issuing a policy to these folks. Now, once the Court of Appeal had rendered its decision, it found that the underwriters and Imperial were entitled to damages as a result of the fraud perpetrated by the insureds and the effective rescission of the policy. And they sent the case back to the trial court to determine how much money the insureds owed to the insurers for the money Imperial had advanced for additional living expenses and for additional contents payments, and the amounts that the insurers paid to their lawyers and investigators for the defense to the claim and to the bad faith lawsuit. Trial was held in a very large courtroom on the top floor of the Los Angeles County Superior Court. I testified as a witness for the insurers, and when I entered the courtroom for the first time, I was surprised to see a very unusual situation. There were 3 bailiffs in the courtroom. All 3 bailiffs never removed their hands from the weapons resting on their hips. They had received testimony from the claims investigator that he had, in fact, had his life threatened by the insureds or representatives of the insureds at least 4 times. I had personally received a telephone bomb threat at my office, where the person who called into my 19-year-old receptionist told her that there was a bomb in the building and that it would go off unless I left the insured alone. And she, being young, innocent, and very wise, merely answered by saying, could I please tell Mr. Zalma who was calling? And the phone was hung up. The local police department received the report, came to my office, and the youngest policeman on the force and I investigated the building and found no sign of a bomb. There was, of course, a fire truck parked across the street from my office, and when I asked why it was there, the officer said if the bomb goes off, they are there to put out the fire. I let all of my employees know that if they wish, they could go home and work from home, and nothing came of it. And then as I entered the courtroom, I was met by the insured, who greeted me with a smile and said, "Zalma, interesting to see you. Amazing, you're still alive." I took that as it was meant, as a threat, and as I walked up to the counsel table, I whispered to the trial lawyer, who was taking evidence on behalf of the underwriters, that he should ask me first what the insured had said to me as I walked up to the door. I testified about the damages and about the fraud, and was excused from the court with a bailiff offering to walk me to my car. He did walk me to the elevator, and I simply went back to my office. After 3 days of testimony, including testimony from the Los Angeles City Fire Department Arson Unit, the court determined that the insured was responsible for falsely obtaining a policy of insurance, was very probably responsible for arson, and ordered the insured and his insurance broker to make the insurers whole. And in that way, the insurers received from the insured more than $600,000 in damages to reimburse them for monies expended in the investigation of the claim and for monies paid out in good faith to the insured for additional living expenses. That amount was paid in full by the insurer for the broker and by the insured. But that didn't end the story, because shortly after the judgment was paid, the insured sued the investigator and the underwriters at Lloyd's for losing all of the debris from the fire. Well, in fact, all of that debris was in the storage unit and was made available to the insured, who, of course, had no interest in collecting it. And eventually it was disposed of. And then, after that suit was dismissed, the investigator immediately brought a malicious prosecution action against the insured, who was ordered before trial to settle with the investigator. And he did so first by offering what he claimed was a $25,000 bottle of Armenian brandy. We, of course, checked with experts, and the most expensive French cognac was less expensive and would cost no more than $1,100. And so the offer then changed to cash from his homeowner's insurer, who had been defrauded in giving him a policy. And even when warned about the fraud, they decided it was safer to pay the investigator than to fight with the insured. So even when it was established in a court of law and an appellate court that the insured was a fraud, that he had misrepresented material facts, that he had concealed material facts, that his policy was properly rescinded and he was required to indemnify his insurers, and that he had then obtained a new policy based upon the same false representations and managed to get that insurance policy to pay the damages needed by the investigator. Apparently, fraud succeeded on behalf of this individual. And since the 1980s, when this case was finally resolved in 1988 and 89, he continues to file lawsuits in Los Angeles Superior Court and is one of the most active litigants in the court, and is probably still committing fraud on a daily basis. I saw in my career one or two additional claims by his children, but not by the insured, and noted that his name was mentioned in a U.S. terrorism committee report as a potential terrorist who needed to be watched carefully by federal police agencies. Thank you for listening. If you want more detail and you want to understand, I created a fictional version of this book called Insurance, Fraud, and Terrorism, which is available on my website in the section called the Insurance Claims Library, and from Amazon.com as both a paperback and a Kindle book.